Welcome back to Cryptocurrency Trading, Mastering Scalp Trading Strategies by Wealthy Education. In this video, I'll take a look at the stochastic oscillator. So the first thing we need to do is pull it up in your indicators of metrics and strategies. You just type in stochastic, it will come up. We already have it saved on our platform. And there you go. That's what a stochastic oscillator looks like. Basically, what it does is it measures overbought and oversold conditions. Now, having said that, it is more or less a range-bound indicator. You don't want to mess with it so much in a trend because you can see we, have a trend there, and you can see just how all over the place the indicator is. So the 80 level in the stochastic oscillator is considered to be overbought. So anything above there is overbought. Anything below 20 is oversold. The idea is that the market will turn back around. Traders will wait for a moving average crossover. So it goes into the overbought condition. Both of these averages are in the overbought condition. The quicker one slices through the longer term one right here. That is a sell signal. And you can see it did in fact drop. Once it crosses again, you get out. Hopefully, you have the wherewithal to wait. Now, there's a lot of what ifs, but in theory, you could have said, okay, but I'm going to wait until it gets into the oversold condition and ride it out. That generally doesn't end up being the best of strategies, though, because the reality is that once it crosses, normally you get a bounce, and then on top of that, it may take off in the other direction. I mean, we are talking about a very limited space here, scalping. Let's go ahead and let's put something else on here. So Shiba Inu, you can see got a little overbought here, went sideways for a while before dropping. Now, I'd point out that it also was an area of resistance previously, so you have to ask yourself what's more important. It's also an area over here that was resistant. One thing that, and most courses won't tell you this, but one thing that stochastic is good for in a trend. If you're short and you get this big extended candlestick and it starts to change in the other direction, that means you might be running out of downward pressure in this market. And it did bounce. Now, is that going to change Shiba? Probably not. But it is definitely something, might tell you tighten up your stop loss or close some of your position or, just take profit. Let's see here. Litecoin. So again, you want some type of trend going. So if you get involved in this trend right here, you get this oversold condition, right? It is time to get out, or it's time to short it. If you look at the longer term trend, you can make an argument that it's in a longer term downtrend. This is an area that had been support. We bounced all the way up there, and then we bounced all the way there, and this was the candlestick we were looking at. We got overbought, so it makes sense that we pull back. We got oversold down here. Your stop loss would have gone on the other side of the candlestick, and then you just take profit when the indicator tells you it's time to get out. Again, there are a lot of other things that you can put into the picture. The resistance, obviously. You could take a look at this. Support resistance here, and that's exactly where we ended up. Having said that, we did cross here, but we did go down to there. Another strategy that you could do is once you get that cross here, move your stop loss, break even. Because no matter how good an indicator is, it's not 100%, and you would have, in fact, fallen all the way down to this level. So let me run through a couple of examples in this next video of how you actually are going to use it.